Hello and welcome. I'm Suyash Maheshwari and you are watching First Stick here on News 9 where we bring to you the morning buzz on the last seat. First and foremost, wishing all our viewers a very happy new year. Hope this year brings you love, health and prosperity and we continue to make money as we have in the Indian markets for the last 8 years and that's how long the bull run has been for us. But coming back to the day-to-day grind, not a lot of cues at least from the global front to work with, as most markets including Asia, including Europe and US are yet to be back from the seasonal holidays. However, some of the markets barring Japan have resumed trading after the holidays and they are trading in the red this morning. Most of them are in the red, as you can see on your screen. Hang Seng is down somewhere around 1.5%, Shanghai Composite is down 0.2% and Kospi, South Korea's index, is down somewhere around 0.3% or so. And this is after Japan was hit by a powerful earthquake on New Year's Day that killed at least 6 people and triggered a widespread tsunami warning. Also, official data showed that China's factory activity contracted further in December, which is adding to further weakness. Among other cues, the dollar index continues to correct. The US 10-year bond yield is also falling and crude prices, which remember in the last week of December we saw a sharp spike in them, they are back below $80 a barrel. Back home we have opened on a flattish note with the first tick for Nifty coming in at 21,751 mark, and since then the market has given up some of those did try to bounce back, but it's still trading in a muted range and Nifty is, as of 9:30 AM, holding above the 21,700 mark. The Sensex on the other hand is down about 0.2% at 72,128 points. The broader markets, they have been the outperformers for the majority of last year and they are trading in the green this morning as well. Midcap 100 is up 0.13% at 46,531 mark and the small cap index is just a stone's throw away from 15,300 mark. And volatility has also come down. India VIX, remember, has seen a sharp spike. We were at about 11 sort of levels in November. We moved to about 16 sort of levels, but at 14.61 we are still elevated historically speaking. But with that, let's also bring on board Avani Bhatt, Senior Vice President at JM Financial. Thank you for joining us on First Stick, ma'am. A very happy new year to you. New Year's Day was turning out to be a perfect start to 2024 with Nifty even making a record high. However, the index in the last hour or so saw a sharp correction which even took us below 21,700. And I have two questions here. What explains that correction? Was it a technical fall? And second, if this weakness persists, where can we find support?
Good morning, Suyash. Wish you a very happy new year and a very happy new year to all the viewers as well. Yes, so Nifty 21,800 to 850 area is the exhaustion zone where we could see some technical sell-off coming in. And overall, the support, if you look at the certain data points.
All right, I think we
one
have...
is the, in fact, improved yesterday to 69% longs against 31% shorts. And overall, if you look at the FII data, they are buying in index options, but they are not trimming down in the index futures positions. So it clearly means that it's a temporary halt, a temporary, pull. If I metaphorically speak about it, markets did party in December and it was a spectacular rally. Thereafter, it's a bullish hangover right now. And so there is some rest required for the recovery from this entire bullish pattern. So that is what is happening right now. On the downside, immediate support is at 21,700. The 21,700 strike OIPCR is well above 1, which means that it's a put heavy positioning at 21,700 strike. So in case if this OIPCR figure melts down to close to 1, then there could be a breakdown below 21,700. And in that case, the next support level on the downside is at 21,500. So as of now, Nifty is in a rest period. It's consolidating. The broader consolidation range would be 21,500 to 21,850. And the day Nifty closes above 21,850, that's when the rooms will open up for the 22,000 mark.
All right, so a close above 21,850 is required to make that run towards 22k. But ma'am, moving on to Nifty Bank. Now the banking index overall was a laggard in 2023, but the index did turn a corner in December. Do you expect this bullish momentum that we saw in the last month or month and a half to continue in the banking bank?
So even banking index has been the laggard all throughout this entire rally. Bank Nifty has always been the last mover. Surprisingly, it's always the Bank Nifty that leads the rally. But this time in this entire rally in last 2 months, Bank Nifty has been a laggard. Yesterday, Nifty made a new all-time high, but Bank Nifty was way away from its all-time high. As far as the levels are concerned, I think 48,000 is a very, very crucial support level that one needs to check out, because if 48,000 is breached, then on the downside, the next support is only at around 47,400. And there is no, I mean, minor supports can come around the round figures of 47,500, but overall, the major support is 47,400. So as of now, 48,000 to 48,500 is the trading range, the consolidation range for Bank Nifty. If it is able to move past the 48,500, 600 zone, then there will be no stopping, and we will see Bank Nifty move cross 49,000 also. So yes, a directional move will be certain only once either the support of 48,000 is breached or a 48,500 level breakout occurs on the upside. So it's a consolidation phase, resting period for Bank Nifty also.
All right. Ma'am, also wanted to get your view on India VIX. Now that has moved quite significantly. We were at about 11 sort of levels in November, went on to touch 16. Now we are somewhere around 14.5 sort of levels on India VIX. What's your view there? Is this something that we should be concerned about, this sharp spike in volatility?
Yes, now volatility, a spike in volatility has baffled a lot of investors and traders in the market. That's because usually the correlation with the price movement is negative. If the index is moving up, the volatility comes down. But in this case, what has happened in this, there were two instances in December when there was a surprise gap up opening. One was post election results, and one was later after the Fed policy. So in these two instances, a lot of call writers were trapped on the wrong side, and there was a heavy unwinding scene in the call writing positions. So that is the reason why India was shot up, because traders had to pay a premium to square off their wrong positions that they were caught into, and that's why India was shot up big time. Also now nearing budget and a lot of events lined up in the next 2 to 3 months, I think volatility is going to remain the flavor of the market, and it will remain in the higher band of around 13% to 16%. It may rise further, come close to around January end. We may see it cross 16% also. So yes, it's a matter of concern, because high volatility is always correlated to a negative price movement. So there is a possibility that we may see some knee-jerk reactions in Nifty as well as Bank Nifty.
All right. And moving on to individual stocks, I think there is none bigger than, at least today, than Vodafone Idea. Now the stock has hit a fresh 4-year high, and it's up somewhere around 30% or so in the last 5 sessions, amid reports claiming that government could sell about its 33% stake to Elon Musk and his satellite internet venture Starlink. Now, what's your view on Vodafone Idea? Because we are seeing good volumes also build up there and a big breakout on prices, isn't it?
Yes, so Vodafone Idea has moved above its 200-day moving average, which is currently at 12.64, but it moved above that level after nearly 2.5 to 3 years. And this sort of breakout, whenever it occurs, even the up move is anywhere close to 68% to 100% retracement of the entire price move. Now, if you look at the 68% retracement, that comes close to somewhere around 18.4. And that is the reason why even yesterday we saw some profit booking coming in at 18.4 levels. But it's a temporary retracement again in the up move. From 18.4, it may probably come down to around 16 levels. But overall, the target of this entire breakout is placed at around 25. So any kind of dips that we find, it's a normal retracement in the bull run, and it should be used as a buying opportunity. Targets would be around 25 on the upside in probably next 5 to 6 months.
All right, target of 25 for the next 5 to 6 months for Vodafone. But, ma'am, another stock that's also seeing a good breakout with heavy volumes is Ashok Leyland. Now, the stock, was up somewhere around 3 to 4% yesterday, and it's also trading higher. What's your view on Ashok Leyland, ma'am?
So Ashok Leyland is one of my recommended stocks also, and it's in my recommendation list even today for the show. And the view is extremely bullish. It's the only player in the EV market where we had seen a lot of consolidation in past few years, and now the breakout has occurred. There is going to be no stopping at least up to around 220 levels. As far as trading point of view is concerned, a short-term trading point of view, 200 would be the first target. One can keep a stop loss at 176 where the breakout had occurred a few days back. So view is extremely positive. Any kind of dip close to 181 to 182 levels should be bought into. Stay long in this stock. First trading target would be 200, and if you can hold on for a couple of months, probably 3 to 4 months, then we could see upsides of around 220 to 225. So view bullish.
All right, bullish view on Ashok Leyland. Indian markets are seeing some bit of a selling pressure. We are seeing another bit of decline. Nifty has in fact fallen below 21,700 mark, and it's down by about 50 points or so from those levels. We are in fact near the day's low. Sensex has also fallen below the 72,000 mark, and the mid cap and the small cap index, which were by the way, which had scaled new record highs at open, now they have also turned the corner and they are in the red. Both mid cap and the small cap index are down marginally, and volatility has spiked, and India VIX as of 10 a.m. this morning is at 14.77 sort of levels. But coming back to you, Avani, Ashok Leyland was on your buying radar. What are some of the other stocks that you would recommend at this point in time?
So the view is positive on the entire pharma pack, but out of those, granules is one particular stock where a very good build-up has happened, and we would recommend buying it in the range of 400 to 405. It has moved up today. It opened with a gap opening, but obviously there are, retracements that you will be getting in this entire up move. So any dip close to 400, 405 will be a buying opportunity. The first target would be 440 on the stock, and keeping a stop loss of 387. The next sector that we like is chemicals and fertilizers. It's in the limelight. In this sector, the stock that we like is Chambal Fertilizer. One can buy in the range of 370 to 375 for a target of 460 and stop loss of 358. So the risk reward ratio here is pretty good. Look out for the proper buying levels. Whenever the dip occurs, 370 to 375 is a good buying opportunity. Another stock is City Union Bank, CUB. One can enter into the stock at a price of around 150 for a target of, it's a short trading call, and the target would be 165. Stop loss to be kept as 144. The other sector that one has to keep a watch on is the IT is already forming a base and bottoming out. So that is one particular sector where one can remain long, one can initiate long positions for next 2 to 3 quarters. And out of this, Wipro is one particular stock that we like. One can enter at a rate of around 475 or a target of 495 and 520 on the upside, and keeping a stop loss of 460. And Ashok Leyland, as I mentioned, that's a buy call, buy trade. One should be initiating on any dips close to 180 to 181, keeping a stop loss of 176 where the breakout had occurred. And the first trading target would be 200. And if you can keep it for 2 to 3 months, then the upsides are up to 220 to 225.
All right, those are the buy calls from Avani Bhatt. Thank you, ma'am. Thank you for joining us here on First Take. But moving on, Indian markets are still in the red. We are seeing, quite a good bit of weakness set in, but we are off the day's low. Nifty 50 had made a day's low of about 21,627 mark. We are currently just about 20 points above those levels. Sensex still sits below the 72,000 mark, and the Nifty mid cap and the small cap index are also trading in the green. Among sectors, except the pharma and the PSU banking pack, most of them are in the red this morning. Like Nifty Bank is down about 0.6% below the 48,000 mark, and among the top losers is also the IT pack, which is down about 0.7%, and auto pack, which is down about 1% or so. But with that, let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Thank you for joining us on First Take here, Gaurang. Now, 2023 overall was a fabulous year for us. Nifty surged about 20%. The broader markets rallied by about 50% or thereabout. But that's in the review. Like, we are in a brand new year, so I'll ask you to do some crystal ball gazing over here. What's your outlook for 2024, sir?
If wishes were horses, beggars would ride. But at the same time, Suyash, I think the first half is going to be choppy and volatile up until May, June 2024. And that is the time, by that time we'll have the elections done and dusted and the outcome known. And possibly a little bit of recovery after that. I'm not saying that in the first half you will not see any recovery, but that recovery will be witnessed by a lot of volatility. Third quarter earnings, budget, fourth quarter earnings, and then of course the big election. So, and on any opportunity, Suyash, between this Jan 24 to May, June 24 on the downside will be a great buying opportunity. Create a portfolio not from a short to medium term perspective, but from a long term perspective. And if I have to give you a conservative estimate on the returns as far as the indices are concerned, Sensex and Nifty for the calendar year 24, my sense is that between conservative side 12 to 15%. And if everything goes well, along with the outcome of election in line with what the market expects it to be, then possibly this higher end can be stretched a little bit higher to about 18% or thereabouts.
All right. So, sir, if we give another, another year in the positive, we'll be, Nifty would have rallied for the 9 consecutive years, and that is unprecedented. No other market globally has been on a bull run for this long. What's driving this optimism for India, and can this continue, over the next 4-5 years?
So, Yush, I think first of all, we all as Indians have to convince ourselves that, instead of asking, can we, just flip that word to we can. And I think it will change the entire perspective. I'm still surprised with the kind of pessimism that people have on the street in terms of the performance of Indian economy overall as far as the GDP run rate is concerned, and on fallback of earning visibility, markets getting rated upwards. And I am extremely positive and optimistic about Indian markets. And I think, historically speaking, like you were mentioning, there were no markets which have witnessed this kind of, uptrend. But we are different, let's face it. And we have many more much more capabilities and capacities and opportunities to deliver. So I wouldn't be surprised if we have a very long, durable, positive market. I would not say a bull market. I still say a positive market with an average return of about 10 to 15, 12 to 15% on the conservative side. And if there is no major geopolitical event or any natural calamity unfolding, then possibly we can do much better than that.
All right, sir. And the December quarter earnings season is here. It's due to begin in about 10 days' time. And as always, IT giants TCS and Infosys will kick off the show. Now, what are your broader expectations from the IT pack this time around? Can we expect some shift in commentary and demand outlook?
So, as a brokerage house, Suyash, we at Geojit Financial Services remain positive beginning this financial year and even last year, when large part of the market participants were advising an avoid on the IT universe. But we remain positive with a caveat that nothing major is going to happen in terms of turnaround on the earnings front. But we did have better earnings for the second quarter. There were no complaints. Given the deal pipeline and of course the improvement in terms of environment and post the Fed meeting outcome, our sense is that third quarter may be a shade better. Fourth quarter, as we all know historically how the trend has been for the IT universe as far as earnings is concerned. But speaking about next financial year, 1st April 24, I think there's going to be a major positivities in terms of earnings, and this would translate into a lot of participants who are staying away from IT universe coming back to it and possibly some kind of re-rating on the higher side also. So we've been advising selectively buying into large cap and mid cap IT names.
All right, sir. And what's your view on the pharma pack overall? You know, we are seeing good bit of a buying interest in pharma stocks. In fact, even this morning, while all other sectors are in the red, is a Nifty pharma pack that's up somewhere around 2% or so.
So you have the new avatar, which is troubling the world in form of COVID-19. And whenever these kind of news flows are, hogging the limelight, pharma, diagnosis and hospitality, I beg your pardon, healthcare, that is hospitals, come into focus by default. And the history was, is and will always remain is that India is the pharmacy to the world. Nobody can change that. Opportunities are there. We are not saying that there are no opportunities. In fact, we have a dozen plus stocks in the pharma universe, healthcare, diagnosis on which we have coverage. But my sense is that look at APIs, generic intermediaries, and treatment specific like oncology, etc., would do much better compared to the entire universe of pharma. And over there, Sun Pharma, Cipla, Dr. Reddy's, Divi's Laboratories, Zydus Life Science are some of the names that I can possibly think of in terms of long-term investment idea fundamentally.
All right, that's Mr. Gaurang Shah for you, sir. Thank you for joining us here on First Tick.
Thank you so much.
But with that, let's also look at how the markets are doing, and they are staging some sort of a recovery. Nifty is about 40 points off the day's low. Sensex is also making, trying to claw back towards the 72,000 levels. As you can see on your screen, as of 10:10 a.m., Sensex was about 29 points shy of the 72,000 mark. And Nifty, in fact, is making move towards 21,700 mark. We took support at 21,630 mark, which from a technical standpoint offers a support. And the mid cap and the small cap index, which remember have scaled a new record high in today's trade. Nifty mid cap, for instance, has a record high now sitting at 46,652 mark. And the small cap index has a record high of about 15,324 mark. They have given some of those gains, and both indices are trading in the negative. The Nifty mid cap 100 is down by about 0.11. Both indices are down by somewhere around 0.11%. And volatility index, it's slipping in and out of the green zone. India VIX as of 10:10 a.m. was down 0.42% at 14.62 mark. Moving on to sectors, apart from the pharma pack and the PSU banking index, which is by the way trading on a flattish note, most sectors are trading in the red. Nifty Bank is down by 0.5% or so. It has moved in fact above 48,000 levels, and the auto pack is down by about 0.9%, and IT pack also continues to trade in the red, down by about 0.7% or so. But with that, it's a wrap on this edition of First Tick. Keep watching News 9.
This was intended to be a terrorist spectacular without precedent.
The plan was to bomb 2 Air India passenger aircrafts simultaneously.
There was a loud explosion and the whole plane just vanished.
The police dropped the ball, the intelligence officers dropped the ball, and the politicians dropped the ball.
It was a conspiracy that destroyed my life. It destroyed 331 lives.
News is now content. Just stream it. Download the world's first news OTT, News 9 Plus, ahead of the curve.